I think she's doing a very good work there, based on what I've seen, right?
Yeah.
This is good because she's gonna need to use those skills. Xinyan, can you hear us? Are you
Second,
okay?
uh,
Here she is. Are you back in the US? What's your situation? Or
China.
are you still in China? Okay.
Oh yeah, I back in China last week.
Okay.
So this week I'm trying to apply our model into live trading. Uh, Let me share my screen. Uh, I'm not complete this part. But I think I have done the major part. Because previously our machine learning model can help us to make predictions like the peak and valley and help us to um, get trading signal. So I'm trying to apply that into live trading using interactive broker API.
Uh-huh.
Mm, And first, to connect to the API, and then I
Uh-huh.
can get the historical data, um,
Uh-huh.
which is
Uh-huh.
1 hour data. Uh,
Yeah.
and then after I get the data, I can calculate the features and events.
Uh-huh.
Um, and then the next part is to train the model and use the historical data. We train the uh, base model and then the meta model and
Uh-huh.
then and then we save the model because I think we don't need to update the model every time we got new data. Instead we can choose to update the model every day.
Okay.
So after we save the model, we can use this model for whole day trading.
Uh-huh.
And this
Yeah.
function is to make predictions and decisions. Like first we update the data. We update the data.
Uh-huh.
This part. Um, we update the data. Um, uh, we fetch the new data with the API, and
Uh-huh.
then calculate the features
Uh-huh.
and save the new data as X, and then use the model we have to make predictions, use base model to make predictions, and
Uh-huh.
calculate the position size with meta model. And then we can get the trading signal and also the position size. But
Yeah.
I still need a execution module here. I will complete that. Mm,
You mean a trading execution strategy?
oh, sorry.
I'm sorry, Zhenjiang. Hello. Are you
Uh,
talking about a trading execution strategy?
yeah,
Or you're
yeah.
talking about sending a market order?
I'm talking about sending market order.
Oh, okay, okay. Got it.
Okay.
Sure. Yeah.
So I'm still missing this part.
Mm-hmm. Yeah.
Mm. I think that's what I do this week.
That's amazing. That's a great progress, I should say.
Mm.
Yeah. For market orders, I would suggest we want to move this setup into another repository, but meanwhile, you can check our current repository, which is, let me see, so you have this, let me share in this in the chat. So there you have our Forex trading setup that we have built to trade algorithmically with using Interactive Brokers API. And in the SRC folder, you will see these source code files, okay? And you will see there the IB functions, I believe. Yeah, IB functions. So you will have there how to send the market order, stop order, take profit order, forex contract. I mean, this is for forex, but you can maybe use something of it in your trading application. You need to evaluate the whole code in case you want to find something relevant for you, okay? Yeah,
Thank you, Josie.
sure. You have maybe questions?
Um, think
Or maybe Prince, do you have questions? Hello, Prince.
Hi, Jose.
Hello, Prince. How are you?
I'm good, thank you. Hope you're doing well too.
Yeah, same. Please tell me,
All right.
is there something that is there anything that I can help you out?
Yeah, I had some questions written down, but unfortunately, I'm not seeing them. Let me try. That is
Mm-hmm.
what I've been looking for.
Mm-hmm.
It's still out. It was around the pre-processing. I wanted to understand certain things there were.
Mm-hmm.
Prince, what's going on?
Yes, yes. Hello, Professor.
Yeah.
You wanted to ask a question?
Yeah, do you have any updates or what's going on?
Yes, yes. That is what I wanted
Oh,
to
okay. I thought you
proceed
were okay.
with.
Go ahead.
Okay. Jose, I just want to understand the reason for normalizing the data and what are the potential issues that may arise if you omit such process in your pre-processing of data.
So the reason usually is because some machine learning models work the best with normalized data or scaled data. Okay.
Okay.
So, the data are numbers, So, so in this case, for example, for the linear regression model, if you have very low numbers, for example, 0.0005, for example, then when you get the variance uh, of the x transpose x, for example, raised to the power of -1, then that's a part of the formula of getting the betas of the parameters of the model in the linear regression. Then you will see that this number, the determinant will be a very low number, and this is not so good for estimating the linear regression model. Okay, so that's why you need to normalize the data um, or scale the data. So whenever there's high variance in the in the data, you might need to scale the data.
So it is only when you see that there is high variance in it that is when you have to scale it. But
Yeah,
when
For
They are
example,
a bit closer.
when you are using deep learning models,
Okay.
you need to uh, you need to use the gradient descent algorithm. Okay, and when there's high variance in the data, you will see that the delta of the gradient descent will move drastically from one point to the other. So in order to avoid that, we are better off rescaling the data or normalizing the data.
Okay.
Now,
So,
I'm sorry, I'm talking about scaling the
yeah.
data. Now, normalizing the data is because some machine learning models also work the best with normally distributed data. Okay, and yeah, so that's it.
Okay. So, if suppose I'm to run two different model, one with normalized data and one with the one that has not been touched at all, that has not been scaled, the accuracy of the model, is it the case that at all times the one that has been normalized, it seems to be accurate compared to the one that has not been scaled at all?
I'm sorry, can you repeat your question, please?
So, assuming I have two different models that I want to test the accuracy to see which one is performing better on my data,
Uh,
and I have a data that has been scaled and one that has not been scaled at all, is it mostly the case that the one that has been scaled will seek to perform better than the one that has not been
actually,
scaled?
actually, that depends on the same data. You shouldn't have like you should have an agnostic approach. I mean, maybe in algorithmic trading, it's not always the case that doing I mean, it's usually the best to use science in algorithmic trading, okay? But sometimes maybe tweaking something like, for example, the RSI, instead of using the average gain, the simple average gain, you can use the exponential average gain to compute the RSI. Whenever you do that, you might get an improvement in your strategy performance. So the same here. It's like you're doing scaling depending on the model. For example, in linear regression, you are better off normalizing the data, for example. But of course, you can use non-normalized data and see what happens. You know,
Okay.
in case your
Okay.
model converges and gets prediction, you're going to see how well the strategy performs. So it's better to always to follow science. However, you can tweak some things in order to see what could happen to your strategy performance.
Okay. And one other thing that I would want to understand would be on autocorrelation.
Uh-huh.
What role does it play in most of our trading strategies? Because I read a paper that seeks to portray it as one of the main keys in deciding on trading strategy. So I wanted to understand its main role and how
Okay.
is it factored in most
So
trading strategies.
yeah. So autocorrelation means that, for example, yesterday's price has an impact in today's price.
Okay.
Autocorrelation means also that the last 5-day price would have an impact on today's price. Autocorrelation could also mean that the the last 1,000-day price would have an impact on today's price.
Okay.
So the higher the correlation, the autocorrelation means that very long past data will have an impact on today's price. Okay.
Okay.
So whenever there's high autocorrelation, that means the price has long memory.
Okay.
Okay. And whenever you
Okay.
have long memory, you also say that it has a high persistence of the memory. Okay. And whenever you have long memory, and you are using, for example, a linear regression model, it is not a good idea to have the prices as, I mean, non-stationary data. Wait a second, before saying that, whenever you have long memory, then you say that um, the prices are non-stationary. They are not stationary. Okay.
Okay.
So whenever you have a price series that is not stationary, then you will say, um, for example, for the linear regression model, you need stationary data in order to perform the linear regression model. Okay, that's a basic scientific rule, I would say. So of course you can use linear regression with non-stationary data, but maybe you will not have the performance that you would like to have, you know. So autocorrelation means that whenever there is high autocorrelation and the machine learning model that you're going to use needs stationary data, then you might need to um, make the price series that is highly autocorrelated, make it stationary to run the model. So depending on the model, you will need to make the price series stationary or not.
Okay. And does it being negative or positive also influence your decision in going either short or long?
Um, so we're talking about, I mean, let's separate two things. Whenever we talk about machine learning models, you are better off with respect to the machine learning models that need stationary data. Then you will need to have prices that are highly autocorrelated, make them stationary. Okay.
Okay.
Now, regarding long and short signals, for example, if you have uh, a moving average crossover strategy where you will have a big autocorrelation in the prices, okay, because usually prices have long memory, you will see that the prices will have trend momentum, right? So momentum. So in that case, whenever they have momentum, that means they have some high correlation or correlation, and that means that you will see very usually you will see uh, a lot of long signals throughout the days, you know. So yeah, whenever you have momentum, you will see a a good decent number of days where you will have long signals or short signals depending on the sign of the momentum.
Okay. All right. Thank you very much.
Thanks to you. Is there any other question that you would like to be addressed, if you would like it to be addressed?
For my end, none. Okay, I think the other team members are not on the call.
Zhang Yang, do you need to clarify maybe something else?
I think we can get started. Maybe David can just kind of join late if he can show up. But Alex, we have pretty much everything kind of ready to go. Obviously, we're still waiting on the iShares to
update. Yeah, I checked it again this morning. There's still, I think I know why that hasn't been posted. I think some index providers, so that people can't use their data to replicate funds easily, require that there be a delay in posting of holdings.
Okay.
Because I noticed for other iShares products, they're up to date, but not for the Russells.
Then
That's one of the only other place that has a Russell fund ETF that's would be visible as Vanguard, but they also only publish like a month in month lag. So I think we just have to wait through the end of the month. Like I said, I keep checking it, but I don't think they'll update it probably until after month end.
Yeah, we have we kind of know what we have to do. We have a, like a
Yep.
personal doc ready for to type our report. So I think all we're waiting on is just, you know,
Yeah, you need that because again, it's you can manage the additions and deletions because with that's been published, but not the weights and not the share counts.
okay.
And if you start getting them from a different source, that's not going to work well. So I think for this at this stage, you just have to kind of wait it out. It'll be another 2 weeks, it looks like.
Do you think we should wait on even doing the additions? And
Yeah, because you're not going to have the right share count, right?
Okay.
Even if you pull them from a different source, then you're going to have a difference. So the key is, since we're using that as a universe, I mean, this was a workaround because the only other way would be to buy the data, and that's expensive. So this was a workaround, and I don't remember last year, to be honest, if there was a lag last year or not. What's interesting is that they don't mention that the data's out of date on their website. They say so they're using as of date that's current, but that's only the prices, not the holdings. So like I said, and since they update everything else, I think it's just a contractual issue of that they don't want, Russell doesn't want it published, so it's nothing we could do about it right now. But anyway, just one way to keep checking, if you guys do check it, you could just see the number of holdings they're carrying is 2,600. And they'll start out at 3,000. It starts dropping because companies merge, and so even after a week or two, usually it's something less than 3,000, but not 2,600. And I keep checking because on the FTSE Russell website, they publish the additions and deletions list, so you can just do a quick check to see if any of the additions have been added yet. So. Anyhow, there's nothing we could do about that right now, unfortunately. So we'll have to change once we do it. Then we'll have to change the methodology to make our rebalance basically a month later. But we can deal with that after the fact.
All right. I'm sure that we can also, continue this when we if we have to, when we get back to school, we can honestly that'd be pretty easy to meet on campus.
Yeah. As long as you're all ready. The other thing, have you guys looked at that video link that I sent you?
Yes, I watched that. That was a pretty good video.
Yeah, so with the IIA is an industry trade group. They represent all the index providers, and so that was put together to help educate kind of legislators because they appear in front of the regulators in the U.S. and in other markets. So I thought it was a particularly good, kind of high level what index providers do, how indices are used. So they did a nice job in producing that. So hopefully you did well with the quiz also.
Yeah.
But I think the video, it's just there's not a lot of good sources that explain kind of the background of indices in general and index providers. And effectively that's what you guys are with this project. So the other thing, I don't know, the professor's not on, right? Because we talk about now you're not, I don't know if you're all on campus or not on campus right now. Are most people not on campus?
Yeah, not on campus.
yeah, I think I'm the only one who is.
Okay. So to say, happy to come out and, sit down and kind of give you guys more of a detailed tutorial on this and talk about some ideas, but it doesn't make sense until people are, can get together.
Yeah, I agree. We'll have to schedule that. Maybe we can, book out a class and we'll go to Mountaintop to talk about
Something
it.
like that. Yeah. It's been a couple hours. But I did it last summer, but there were more people on campus last summer from the project. So for now, unfortunately, there's not much else I think we could do. Just be ready once the data gets updated. Then once we get that universe done, then we could talk about some ideas of some additional indices that you can create. So you can go through that sort of process and understand how to actually build something new, since that you need that universe. So that's the starting point for everything.
Yeah, we'll keep doing research and make sure that we're ready when, the full share count is and weights are updated. So that when it comes.
I know, I'm pretty sure in the doc that we have, some people have been putting down ideas. I think I put one down for like
Sure.
some, sub indices we could create.
Yeah. Again, you have a universe, that universe 3000 stocks covers, 98% of the US market. It's US only. So, to go to a more global, we'd have to pulling in global prices is a lot more complicated. It's not as easy. You don't have access to them now. You have to get them from multiple sources. So I think you'd have to keep it to something that's US based. But with 3000 stocks, you've got a lot of different themes and ideas we can pull from.
So you're saying for these other indices, it doesn't have to only be within like the PA 100. We can
No,
kind of
no, I would
use
say
all.
you've got 3000 stocks to work with. I mean, the PA 100 was a first, that's kind of our headline, right? But I think there's a lot more that you could do. You can pick some themes and it can show you how you sort and how you find those sort of companies. Some of them, so one of the things just to understand, so the index itself, right? You start with 3000 stocks. They're broken down into sectors and then industries. And that's typically how people start creating what are called like thematic ideas or subsets, right? You have to have some way to sort it. And so oftentimes they use thematic ideas. Today, a lot of people are using new techniques to kind of group stocks, right? And they're using AI and they're using other techniques to kind of figure out what baskets of stocks, because any index is nothing more than a basket of stocks. That becomes in most cases, something that people trade, and people create baskets to create products or whether it's an ETF or just to trade as a basket of stocks. I mean, you can go on a lot of brokerage platforms now, and they'll help you create a thematic basket of 10 or 15 stocks that, maybe it's data centers or things like that. The key is, how do you sort the companies down, right? How do you find what those companies are? That's where the art comes in. But anyway, but you need to start from that universe. So right now we're kind of in limbo. But think of like the types of themes. You could see types of products that are being put out by the index providers by looking at their websites. They publish it. All these ETFs that are out there, a lot of them, not all of them are indexed anymore, but a lot of them are. So you can get a sense of the types of themes and types of subgroups of stocks that people put together as an index. Some are relatively simple. Something could be growth and value. It could be, what we did was basically a geographic, which isn't something that you normally see, but there are some products like that out there. Now, it was companies headquartered in Pennsylvania, right? You can come up with any sort of idea, whether it makes sense or not is a different story, but this is where people are creative, right? And the creativity in the industry is whoever comes up with something that's interesting gets to market first, captures a lot of assets, and does well with that. So yeah, there was a famous one a few years back. Somebody had put together a cybersecurity index right before one of the first big public breaches. And all of a sudden, everybody wanted to invest in cybersecurity companies. And this was the only product that was out there. And their assets ballooned, they had an ETF. So, sometimes these things sit around on the shelf for a long time before they become popular, but sometimes it's just timing. I've seen stuff recently, uranium. People have just some uranium ETFs. It's good to look at kind of the ETFs as the product. But basically these products are based on indices or baskets of stocks, right? And so, anything, if you watch CNBC, they talk about, it's probably an ETF that covers it, the Mag 7 stocks, right? Could be financials. It could be, like I said, any type of theme that you could think of. So, but hopefully we'll try to build some ideas. You guys can figure out what makes sense.
Quick question. So the focus of an index, are we trying to like make it profitable, or are indexes in general just like trying to follow the trend of the comp?
Well, so the idea of teaching you how to build indices and going through this project is so that you get hands-on skills that you can use to get a job, right? At the end of the day, that's what this project's about. You'll learn stuff that most people will learn once they go work at at like either a bank or an investment management shop where they may need to build an index or understand how indices work. So an index is just a basket of stocks, right? Some of them are, like the Russell 3000 is literally the 3,000 largest stocks in the US, listed in the US. Doesn't matter what type of companies they are. There's no, it's very, very broad. The S&P 500 is a little more selective because they have to have profitability, and there's actually a committee that chooses it rather than just stack ranks 500 stocks. Just different approach. But it's not trying to be the whole US market. It's trying to be roughly about 70-80% of the US market representative. So any of these are basically just baskets of stocks. It's a type of exposure. And we're talking about stocks, but this happens in commodities. It happens in fixed income. It happens in crypto. People are doing baskets of different crypto coins. The concepts are similar. The construction and the data is different. So once you build them, then there's, if you watch that video, you see the different ways that people use them. But my goal with this project, what's been always, is give you guys some real skills that when you go to an interview, you could say you've done something like this, because most schools don't teach it. They teach it, in the theoretical sense, but you can sit there and say, hey, I've built an index, right? And I understand kind of what goes into that. And hopefully that'll give you a leg up.
I just have one more question before we end. Is it possible that once we finish our PA index that we can maybe construct like a leveraged index, one that kind of has that type of returns?
The levered indices. So look, we could build anything. Levered returns are a little more complicated because usually it's not the index itself that's levered, but the product.
Okay.
And so it gets a little, it's not as easy to just build it into the index itself, right? The way they actually manage it is, and it gets into how these products trade. A bank will actually issue a swap that'll promise it 2 times the daily return, and basically they lever it on a day-to-day basis. So it's kind of a little more complicated, but it's not the index that's levered, it's the product that's levered. So when you see these 2-to-1 levered products or 3-to-1 levered products, it's not the index itself that gets levered, because and they're not, just be wary of them. If you think of investing in them, they're bad products because they have a daily compounding, which means they rebalance every day and it erodes the value of the investment. So they're very good for very short time periods, but a 2-to-1 levered product does not mean if you hold it for 6 months, you get 2 times the return of the index. That's not how they work. It means you get 2 times of the daily return, which if you do the math, it ends up having a lot of trading, and that trading kind of erodes the return. So they're profitable products to sell, but not to buy. There's a difference between kind of the product side of this and then the index side, right? They do go hand in hand. So all those levered products have an index built into it, but it's how they construct the product that's a little bit different. And we can talk about the way indices are used in products too.
Yeah, I think that'd be good to talk about once we can all at school.
Yeah, because there's a lot of interesting innovation going on there right now.
All right, sounds good.
All right, so I guess we'll talk in a couple of weeks. Hopefully, I don't know if that'll be in August or not. Yeah, it should be in August. So hopefully things will be updated by then, but we'll keep checking.
All right, sounds good. Thank you, Alex.
All right,
Thanks,
Right.
Alex.
Bye now.
How you doing?
How are you?
I am doing good. I hope everything's good with your product launch, and I hope everything's
Yeah,
going.
yes, all good, all good. Thank you for asking. How was everything from university side? Is everything fine?
Yeah, I've been just because I started my work, as I told you, like a couple of weeks ago. So I've just been busy with that and I didn't have a lot of time, but like I still so the work we were working on, like the classification, I made some changes, and I have like clustering scores and everything for that. I'm trying to make it more like easy to read. So I'm trying to, in the like CSV that I output, I'm trying to make more columns so that it's easy to read when you get the CSV, like what it is that you're seeing. But I have some
It's
raw classification scores for all the transactions.
I see. So do I understand correctly that you mentioned you're working in other project and you're doing this work, or do you mean about the meme coins project?
No, I'm not working on a different project. I'm just working like there's an
I see.
office here, so I'm just like working at a summer, getting some like paychecks.
I see.
Yeah.
That's great. That's great.
Yeah. And just another update as well.
Yes, please.
From our last conversation, I think you might remember. So the person at EY, he wanted us to publish this report. And he reached back to me like last week. He was asking if he had any updates on if and when we are publishing. And I said to him, like, we're talking this week and we might have more information after this call.
Okay. That's great. Also, Patrick, I don't know, can you hear us or no? But you asked in WhatsApp about our previous call, but as we agreed before, we decided to skip this the previous meeting. So right now, I will be, from this point of time, I will be more available. So I think we can finalize all the project together. Do you know, Rich, about the Caleb? Will he join us or no?
I don't think he'll be joining us. He's working on his internship. So
I
like
see.
I don't think he'll be joining us.
Okay.
Yeah.
Okay. No problem at all. Okay. I think so. We're really close to the finished project, and let's just decide what we have right now and decide what we need to make it completely finished. So, Karish, can you please remind? So, as I remember, you experimented with different machine learning methods, and then we decided that after you made this, so you made very good empirical algorithm with different weights, with different conditions, how to detect which wallet is associated with market maker and which is associated with organic activities. That's good. Only the last thing that we need to do is to calculate the
pressure, right?
Pressure, yes, calculate the pressure to understand how much this pressure, what is pressure it doing for the market maker, to understand, is it possible for market maker to go with such pressure? And then, as we have some different cases with different tokens, I think in this regard, we can clearly calculate, is our assumption correct or not? Because if we'll receive opposite results, it means that probably it's not correct. If we'll receive correct results, it's good. If we'll have mixed results,
Just one quick question. So from your understanding, that threshold should be somewhat in a close range, right? That organic pressure, like it should be not widely different.
Yes. Probably yes. It's actually it's not very critical. Sometimes it can have some possible threshold, so it can be. But let's just calculate this pressure. So then after this, based on this pressure and based on your algorithm, then we will make a final decision. Does it make sense or does it not make sense? And that's it. And I think we will finalize project on this, because you see, I think it's important for you, for Caleb, that we will make everything done and we can go to our next steps.
That makes a lot of sense. So I have this, like the CSV with all the sports soul change. So I don't have the organic pressure on hand right now, but I can do it after this call, and I'll let you know. And for today, I might have to leave early too, because like I'm still on the clock. I'm just in a break during a break right now.
No problem at all. It's up to you when you will have time. But I just propose, let's finish this project. So I can write a review for so I can write a review for you and for Caleb, and then and we can finalize it. So just to remind you, I know you remember this, but just in case, I want to remind that we need to calculate pressure for organic traders, only for organic. This is one step. And please take into account that pressure can be increased and decreased. What I mean that if organic trader bought some token with, let's say, 10 Solana and then sold it by 5 Solana,
Okay.
you should calculate the cumulative value. So it will be on the beginning it will be 5, and then it will be 5 because 10 minus 5.
Yeah.
Okay.
Like
So
so
you
what I was thinking in my head, I was gonna do for every you know, like we have 8 different CSVs, right? So I was gonna calculate organic pressure for for each of those, basically like a decision block. So I was gonna calculate for that. And
Yes.
from what I gather from what you're saying is like within that like specific block, organic pressure could go up and down. Like, is that what you're saying? Okay.
Yes,
Okay.
yes. So actually, we decided before with Caleb and you that we will use just Solana change as the pressure. It's okay. So
Yeah.
when someone purchasing token, Solana change will be negative.
Okay.
It means pressure increases.
Okay.
But when you see that someone sold the token, Solana change will be positive.
Positive.
It means vice versa. It means the pressure is decreasing.
Okay.
So please keep in mind always, if someone invested in token, this increase the pressure for market maker. Just keep this in mind. And then so our goal is to calculate final pressure for each token before decision block. So we have a lot of transactions, and then we have decision block. So we need to calculate pressure before this decision block, because on decision block, market maker decided what to do with this token.
Decision block is when right before a new liquidity pool is created, and like since now, right?
No. It should be last transaction. It should be last transaction in your file. As you remember, you before on the early beginning, you filtered transaction before the decision block.
Okay,
You
so
already
that I see. But in my new ones, I have it right before the liquidity pool creation.
Liquidity pool creation, actually, it's one of the earliest transaction. So all transactions are going after this. We analyze them, and then comes decision block. And decision block, what it means, that market maker decided what will happen with this token.
Okay. So just to be clear, so like initially when I divided the files, it was based on just the decision block number that we had, right? But then we like changed that and we divided it on the basis of because we saw in the middle of the CSV there was a random liquidity pool creation. So what we did was we changed that.
Do you remember we actually fixed that?
Yeah. So yeah, we fixed
I mentioned you that I checked the files.
Yeah.
And I explained that probably the files are somehow mixed or something like that. So I think you can just clearly use original files, or I think you fixed it before. We spoke about it several weeks ago.
Because I was just grouping them by this token B, and like all token B was basically the pool address of like the swap, I think, for one swap liquidity pool. So I just grouped them by that, and there's like 8. So like that's how I created 8 different CSVs. And how when I grouped them by that token B, the first transaction in every CSV was a pool creation, a liquidity pool creation.
Yes, that's correct. Let me show you. Okay, I just found tokens data.
Okay.
Probably here it is. Let me check. I just replied on my old message.
Let me check.
I will download it. Let me share the screen. I will show you. Yeah, you see? Here you have, this is liquidity pool address.
Yeah.
The name of the
Exactly.
file is liquidity pool address.
Hmm.
And here we have a lot of transactions.
Okay.
It's pretty big, so that's why it takes time to open the file. But here all transactions. And as you using your algorithm, you parsed all transactions.
Yeah.
You parse them and
Hmm.
created a CSVs. But what I want to say, you don't need to stick to the decision block. You need to stick
Yeah.
to the liquidity pool address.
That's what I did.
Yeah.
In my current version, that's what I have.
Yes,
So
yes.
and just to like clarify on that, so like now that I have like the CSV by the liquidity pool address, I need to calculate the organic pressure of that liquidity pool address, right?
Exact
Okay.
for organic traders that your
Organic
algorithm
trader.
detected.
Okay.
Yes.
Okay.
That's correct. That's correct.
All
And then we will see is this algorithm can give us some predictability or no.
I
And
see.
this
I
is
see.
our goal. And that's all. And I think we'll finish project on that.
Mm-hmm. I'll calculate the pressure and I'll just make like a small analytics report and I'll send it to you as soon as
Yes,
I
please.
get that.
Yes, please.
Yeah.
Great. And
Sounds good.
and then I will just send the feedback what I'm thinking about. So how we can detect how our algorithm is work bad, good or
Mm-hmm.
bad, based on this pressure. So then we can make a decision how our algorithm works.
Got it.
Yes, I
That
think that's all.
sounds good. Thank you. And
Thank you,
like
Rish.
I hope your project's going well. And I don't know if you have
Uh,
any updates on the anti-money laundering thing that you were supposed to do.
it's right now it's extremely busy because but I'm glad I'm glad to share. So actually right now we developed algorithm that can do risk scoring analysis. So we analyze an on-chain transaction for blockchain.
Okay.
We indexed all blockchain. We structured in a separate files that can be
Mm-hmm.
accessed very quickly because we see typically one blockchain data is very heavy. It's
Mm-hmm.
terabytes of the data. But if you structure it properly and make proper indexes, so you can work with blockchain data pretty quickly. So you can,
Yeah.
for example, you can in milliseconds you can detect which wallet are send money to this wallet,
Yeah.
and you can go to the even thousands of previous iterations, and you can do it very quickly if you have pretty well structured information. So we right now very deeply in this algorithm, and we
Mm-hmm.
realized that there are a lot of problems in AML field because
Mm-hmm.
it looks like that there are a lot of companies, there are a lot of illicit activities like hacking, some money laundering, or for example, some rug pulls. When some hackers do some illicit activities,
Yeah.
they tried to do money laundering very quickly in
Mm-hmm.
several hours, and then different authorities try to block this crypto, but they respond not very quickly, and that's why such hackers are sent a lot of dirty crypto to the Binance, to the
Yeah.
OKEx, to the Bybit, and to other big exchanges. And actually, this is a big problem because in this case, we see that this actually all blockchain data is dirty because they are connected with these illicit activities because
Mm-hmm.
Binance, for some reason, received this dirty crypto.
I see.
And we implemented some workarounds in our algorithm to avoid this. And we realized very interesting stuff that actually Binance and other centralized exchanges, they can receive dirty crypto. But as they connected with different, they have a requirement that all users should pass KYC procedure. So if someone will send dirty crypto to the Binance, then they will do some legal punishment to them,
I
some
see.
sue them or something like that, or block their funds or something like that. So it looks like that big exchanges looks like sometimes they are a little bit helping in money laundering
Yeah.
for some events. So that's why right now we're calibrating our algorithm to resolve this, to whitelist some addresses. So it's actually a very interesting and deep process, and I'm very busy right now with this development and analysis. But that's very interesting.
That sounds really interesting. And I was really actually surprised by like how you were able to index all the blockchain transactions, because there must be like thousands and thousands of transactions on one chain. Did you guys what kind of data structure did you use to index all the transactions?
You see, we before we used Postgres, we used Kafka, we used Citus, we use Tickhouse and a lot of them, but actually all they are failed. But only when we made our own file structure. So we have a big amount of different files, pretty well structured by directories and other stuff. And using the structure, we can easily access all information. So we structured in. So let's say we developed our own warehouse to store this data, and only this approach gave us really good flexibility.
Yeah.
So if you enjoy this on-chain analysis and such data, I think we have some tasks in this direction as well.
I would really love to work on it, especially now that I've like dived into the field of crypto and like understand
that's
more.
nice.
Yeah. I'm taking actually a blockchain class next semester here at Lehigh, so I'll be doing more study on like the hierarchy, like proof of zero knowledge, proof of consensus, and so I'll probably be doing more blockchain coding and analysis in the future as well.
That's great. Let's finish this project with meme coins, and I will tell you what tasks we have in our project with crypto and with anti-money laundering. I will be glad to share them with you and think together with you how you can help us. That's
Sounds
great.
good. Thank you for
Sounds
talking.
good. Thank you, Rish. Thank you, Rish. Have a good day. So let's keep me updated. I will help you with to finalize it.
And
Thank
good
you.
luck on your product. See you.
Thank you.
Bye-bye.
You too. Thank you so much. Bye bye.
I just saw your chat.
Hey, Ben, what's going on?
Pretty good. I just played around at golf today, so that was pretty fun.
Where's Peter? How come he's not coming today?
I'm not sure. I didn't get an email or anything. So
Me neither. I didn't get anything either. Where do you go? Where do you play golf?
I'm in England right now, so just like a
Oh,
local course, like at
that's
my
pretty cool.
grandparents' house. So I'm just like staying with them.
Do you play in near Lehigh at all?
No, I literally like just started playing like this like vacation because like I've been here for like a month.
Okay,
So
cool. And I've
yeah,
played
so
exactly like 27 holes of golf, so I can only speak. But I want to
yeah,
get better at it because my friends play. But
yeah, exactly. That was my thing. My friends play, and I was just like my grandparents like play a little bit. So I thought, why not just go out with them? You know.
it's hard.
Yeah, that is. I wasn't too bad though. I shot like 20 over par on like a beginner course.
Yeah, I mean that's not bad at all. It's
Yeah,
hard just to get the ball going
yeah.
anywhere sometimes. Like it seems like an easy swing and then, chunk the ground. But
Oh yeah, no, I did that. I did that a few times. Or like I almost hit like someone. I almost hit like a group of people walking by.
I've only ever played at the public course I'm from North Carolina.
Yeah.
And they basically it was like, quote unquote $10 to play 9 holes, but nobody played it. So they would just if I paid $10, I could just putt around for forever.
Oh,
So,
yeah, you're fun.
but I'm spoiled with that here because I'm hesitant to pay real golf course prices when I know I'm gonna stink.
Oh yeah, no, exactly. That's the thing. The yeah, no, I have a driving range like literally 5 minutes from my house.
That's cool. Yeah. But yeah, it's hard because it's one of the only hobbies where it's a pretty significant money cost to even practice. Like I feel like
Yeah, no,
that's
yeah.
like a real barrier to entry.
Yeah, at least like $20 every time you gotta go.
Actually, Peter sent me an email before. He and Wasi are out.
Yeah, that's cool. And I got
Yeah,
meetings at 11 and 11:30.
they're traveling. So, you know what, Ben? You're joining in the fall, right?
No, I'm a sophomore. I'm gonna be sophomore.
Oh, okay, next year then.
Yeah, yeah. No, two more.
2 more years. Okay, so you got time.
Yeah,
Okay, I thought you
yeah.
were joining this time. Okay, so that's perfect. Casey, well, I'll be on campus. We're gonna have lunch with some new students when they're coming in, by the way.
Okay, cool. Yeah, that sounds
And
good.
yeah, and then November, I'm trying to set up a conference again.
Okay, cool.
All right, so see you guys.
See ya.
I see it.
Hey, Kobe. Hello, everyone. Good morning.
Good morning.
So I'm at my desktop today. My laptop got lost in Seattle, so I'm no camera today, unfortunately.
It's okay. Hope there's no big loss of data for you, Casey.
I'm trying to retrieve it right now, but I'm pretty good at backing stuff up. It's just kind of a pain, but should be good.
So, any updates from the project?
Yeah, so I've been going through and trying to do that, the weight propagation function that you were talking about.
Mm-hmm.
And also updates like daily rather than monthly return updates. And that's been really hard.
I see.
And the reason it's been really hard is just because of the way I wrote the code the first time. I didn't really anticipate trying to have to slot that in. And so essentially what I've been doing is essentially just writing it from scratch again because I spent a long time trying to put those features in and I couldn't really get it to work. And also, I knew that later on I was going to have to go back and vectorize a lot of it. So I kind of thought that it would just be
Okay.
better to, now that I know how it
Pre-
works.
Previously, I think it was more on the for loop side for you, correct?
Yes. Yeah. Five,
Yes.
definitely.
Great.
And so,
I'm glad that you were able to vectorize it. So,
well, I'm
maybe
not
you
done
could
yet.
share your approach in terms of how you are going about starting from the price return series or the raw prices of the stocks or the assets to the portfolio returns. How are you going about that?
So, okay. So I have, it starts out and it filters through all of the assets that I have and it sorts them by momentum. Um, and so I have a big vector for each asset for the price and the return of it from whatever period you're looking at. And
Mm-hmm.
so what the code does is it takes where what I would normally do is just subtract the returns 1 month apart. I just now do it 1 day apart. And I have a log return and then I add them all up. And then whatever point you want to graph, it just looks at every individual point and graphs it that way.
Okay, yeah, fairly similar to what I had in mind. Uh, Essentially, assuming a simple 10 stock universe, right? So for those 10 stocks, you have 10 columns of price data, correct? So assuming all of them are in the same data frame with the
Yeah,
index as the date time. Now, if I do a simple dot PCT change or
yeah, I did that.
something like dot log of returns for the for the logarithmic returns, the e to the power r something discounting, right?
Yep.
So point being, singular function can be applied vectorically across all of those 10 assets
Mhm.
column wise, right? So if you look at PCT change for the simple example, right? So PCT change can be applied to each of those columns. Now, once you have the PCT change, uh, what you need is the weight table, the weight propagation table, which we talked about earlier. So
Yeah.
assuming a equal weighted portfolio on day zero, right? So it will be 0.1 throughout. And then whatever price return which you are seeing, that will be the proportionate change in the weight, right? So how for portfolios you do the weight propagation, you compute the number of units or the shares, and based on the shares, then what you can do is when you have the total return and the shares, you can get the market cap or the uh, uh, share into price of the row wise of each date, right? So what I'm trying to say is that even if you are rebalancing your portfolio to be equal weighted at the start of each first working day of each month, then each month you know that the shares are equal, right? But what you don't know, the weight is equal. The shares is like share into price by sum total of all share into price. That is the same thing, right? So based on the percentage change in the price, you can compute the weight change in the weight propagation table. So how you have the price data frame and the price data frame dot pct change, in the similar manner you will have the weight change. Obviously the computation is not dot pct change, it is different, right? Based on
Yeah.
the market cap and the sum of all market cap within that portfolio. But what I'm trying to say is the dimension is the same, right? So
Yeah.
if you have either the weight table or the price table, you can find the other one.
Okay. Yeah.
So for the weight table, what you can do is, what we usually do is that based on the row wise sum, so dot sum axis equal to 1. So those type of Pythonic tricks you can use, or dot sum to frame. So dot sum can do row wise sum, and you can put it into a frame, a data frame, and then put it, assign it to a value.
Yeah. Um, I was never doing anything related to individual shares, just besides calculating log returns. Like as soon as I would have the table of log returns, I would just ignore the share price and have value and assume that you would just buy the cash amount of whatever fraction of your
That
portfolio.
is the similar way what I'm doing. Basically, in my approach, the value is calculated inline and never stored in the column, but the weight is stored in the column.
Okay.
So what you are doing is the intermediate step of what I'm trying to achieve,
All right. I can
right?
do
So
that.
if you have the value, you will get the weight, correct?
Mhm.
If you have the value, then individual value divided by the sum of each row is the weight.
Okay. And you're interested in the weights in case we want to do non-uniform weighting.
Exactly. So
Okay.
weight is more what to say, pertinent when you combine your portfolio management technique with risk management technique. So you're trying to maximize the maximize the return and minimize the risk. And for minimization of the risk, what sort of position sizing you will deploy. So position sizing can be the naive way, which we are talking about, is the equal weighted portfolio. But the more advanced position sizing is the vol target, for example, volatility targeting. So
Okay,
you are targeting that your entire portfolio will have a volatility of 4%, for example.
I see.
How do you
So
achieve that? So
you would
high volatility will have very low weight, low volatility will have high weight.
make sense. Okay, that makes a lot of sense actually. I'm glad you told me that. I can include that.
So what you are already done, what you have already done, Kobe, it's the intermediate step, what I mentioned, the value. So
Hmm.
each value, if you sum it across the entire row, that's the total portfolio value, correct?
Yes.
And the weight is individual share by the total portfolio value. So you are already there. It's just that you have not stored it in the data frame. So maybe you can note this down. Dot sum uh, dot to frame. So these are Python vector operations. To frame and dot sum, within that the argument axis equal to 1. So if you use this, maybe it's a 1 or 2 line change for your existing code.
Okay.
You don't need
So
to re-engineer anything.
yeah, my biggest my biggest thing I've been doing is just getting it out of for loops and into things that you can modify better because the code I have right now is not very easy to change and I want to be able
Yes.
to add stuff better.
No, vectorizing it is very powerful. It will help you in your future projects and
Yeah.
enhancements on this current project as well.
Okay. Sounds
Yeah,
good.
and for what it's worth, I worked on a project with my roommate for optimization that was passive and active portfolio management, and a lot of what we worked on was kind of vectorizing the stuff and changing weights. I don't have my code because it was on my computer, but I can ask my roommate for it, and he should have it. And I have like a paper like that we wrote up about it, which should hopefully explain it pretty well. But I can send that over, and maybe that'll be a solid
Sure,
like
that'd be
Casey,
great.
was
framework to.
this the modern portfolio theory, the Markowitz optimization?
Yeah, that was one of them, and then we have one that's a slight variation on it. The
I see.
project was Markowitz, and then two, quote unquote improvements that you think you can make to that.
Okay. Would you mind sharing with the group?
Yeah, I can send that to everyone on LinkedIn when I find the paper. Let me see if I can get that from
No, like
Corset.
what are the two improvements which you thought can be done on that?
That is a good question. Let me find that. I wrote this a while ago.
Okay, sure.
But when I find that, I will let you know. I can find that now.
Sure, definitely. So, for the broader group, definitely modern portfolio theory or the Markowitz optimization, it is a very nice academic approach to how to optimize your portfolio. But you should always keep in mind it is done based on historical returns, right? And as you would see in disclaimer for almost all the investment banking and research related disclaimers, that past performance is not indicative of future performance. So when you come into the industry, when you come into either hedge fund side or investment banking side, what you will notice is that slowly you will forego your reliance on historical indicators or look back indicators, and you will be more interested into look forward indicators or something which can give you an indication of the future. So that is something to think about. uh, if you maybe read up something, we can have a detailed discussion on this next time we connect.
Mhm.
Okay. Sounds good.
Look forward is basically some sort of estimate, right? And there are essentially two schools of thought in the broader finance and financial services domain. Uh, you must have heard of people using AI or machine learning and whatnot to predict some things for the future, right? So within that, the two schools of thought are either you can predict the price or you can predict the direction. So either you say Intel is gonna go up, or you say Intel is trading at maybe 112 right now and it will be 125. So either you are being qualitative, either up or down, or you are being quantitative, whether it will be XYZ dollars. So I am from the school of thought that believes that it's qualitative. Any look forward prediction, it has to be qualitative. You cannot predict a range or a number for the future, but you can predict the direction. You may tend to agree or disagree with this. As I preface, it is two schools of thought. So my belief is I'm on the qualitative side of things. I prefer to predict the direction, and based on the direction, I will try to generate an alpha signal.
And
We
when
have,
you're doing that, oh,
We have another project here about alpha generation, and the sponsor always talks about how the boss doesn't care about how much, it's which direction it's going to go. So I 100% I agree with what you say, Groff, about that.
Yeah, nice to know that there's another project on the similar lines. But yeah,
Yeah,
thanks,
yeah,
Nick, for that.
the exact same wording too. The boss doesn't care how much, he cares about if it's going to go up or going to go down. He just wants to know
Yeah.
what direction.
And I mean, the people from the other side of the thought process, they tend to make fun of the other side, saying that you guys are risk averse, you are not taking a stand, you are less quantitative. Uh, but yeah, I mean, it is what it is. I mean, you can never turn around somebody's school of thought just by valid arguments. It's a different ball game. I'm not saying that they're wrong 100% of the times. It's just the trading preference and the trading style. You'll get to know more when you hit the ground after your academics. So in the hedge fund side, you must have heard about PMs or portfolio managers. So uh, you being a part of a particular PM's team, uh, I think most of the PMs will only look how your investment psychology or how your uh, understanding of the technical indicators aligns well with his, because
oh,
you are there to represent uh, his view of the analysis. Uh, if he asks you to do a project, uh, it is like his time is way much valuable than yours. So rather than me doing it uh, to 100% accuracy, he will have someone similar to him do it at maybe 80% accuracy. And that's the game. So
yeah.
academics will maybe put you at 70 or 80% of the course. Hey, Prof, good to see you. So yeah, academics will put you in the door, but the last mile of the stretch, you have to do it based on your research, your experience, and your intuition.
Okay. Good to know. Thanks.
So Nick, we missed you last meeting as well. Is there any questions or updates from your side?
Questions on my side, no updates. I have been just pulling data on my end, just so we have some options for universe selection. Right now I have a bundle of ETFs, and I have some data for top 100 market cap stocks in the US, and that's like 10 years
Right.
of daily data. And I have all log returns appended to those already. So I
Okay.
got to talk with the group at this point, if we want to maybe expand upon that. But I figured 100 by market cap and what I had for ETFs was okay in the meantime without talking to anyone. I didn't want to push too far ahead and then have people like disagree with what I was doing. So I wanted to talk to the group about that first before I continued forward. But I'm gonna try and probably do some other indicators on that in the meantime, and then I can always figure out which one of those will be relevant to us in the future. So that's the update on my end, at least.
Okay, great. Any challenges which you're facing on your end, on either technical indicators or the data pull part?
I have the outline pulled up here. I guess the only real big thing was the weighting, but we just talked about that. That was addressed. So
Okay.
like I said, I can talk with the rest of the group about how we want to approach that, especially with Casey's paper. So
Okay, cool. And if I may ask, when is the project report due or the final presentation?
I don't believe we'll have one for the summer
I
at
don't
least.
know.
No, you have nothing for the summer. I mean, we'll start the fall. I'm trying to put a conference together for November, so definitely will be in there, and then
Okay.
it could be used for the capstone, definitely.
Okay.
Got you. Great.
Yeah, so this
Uh,
will definitely ramp up. I'm very busy with my internship right now, so at least on my end, I'll be able to ramp up the process a lot more in the coming month here when I'm done. So
okay,
Perfect.
sure.
Thanks, Gaurav.
Thank you so much, Prof. Any other questions from the group? Casey, Kobe?
I don't think so.
No, I'm pretty
Okay.
good on what to do.
Okay, great. Have a nice weekend ahead, guys. Thank you.
Thank you.
Bye-bye.
thank you, Gaurav.
Thank
You
you.
too.
Kobe, are you on for the Bitcoin or the BTCS project next too?
Yeah.
Okay, cool.
Yeah.
Professor Zara, I was actually talking with Kobe about it a bit too. I heard through Nick or something, if you are ever interested in hosting anything poker, I know like that's like kind of a big deal in the quant world.
Yeah.
Caleb and I play a lot, and we could help
Yes.
get stuff sorted. And if you ever
That's
wanted to host
interesting. Maybe we
anything,
should set something up.
I mean, that's great.
because I mean, people like to hear about it. When I was talking with people at Jane Street and other interviews, they like hearing about it. I mean, it's basically a small scale version of what they do, and they like hearing
Yeah.
that you can talk intelligently about poker theory and that kind of stuff.
Yeah, sure.
So
I mean, I've been getting people around who are here for the summer. We had, I think, 4 or 5 people over a couple nights ago to play, so that was pretty fun. But yeah, no, as many people as we
Let's
can
set
get
the
would
way
be
we
great.
could set something up during the fall, definitely.
yeah, if you ever wanted a
Yeah,
tournament or just like being able to again like just being able to talk intelligently about like poker strategy and like being able to rationalize what a good deal is, like what prices are good, what prices are bad.
yeah,
I've had a lot of positive feedback from people I've talked to in the
Oh no, I
industry
know,
and
I
communities.
know.
Yeah.
Who told me that? Um, ah, um, he's at Millennium now.
Yeah, and I
Um,
mean like SIG has
yeah.
like 11 World Series of poker bracelets. I met Vanessa
Hmm.
Selbst in New York, and she's like a famous poker pro working at Jane Street.
Oh, that's cool.
And I mean, Caleb and I are here in this program because our introduction to like the idea that like the whole financial engineering world likes poker is
Hmm.
because we were invited to apply for a poker tournament in California, hosted by Citadel and Jane Street and SIG.
Cool.
So they
Can you
like
send
hearing
me the
about it.
link? Can you send me the link of that event just so that I could start socializing the idea?
Yeah, I think this year's is past, but yeah, for
No, that's
future
fine. I mean,
years,
even
yeah.
if it's a pass, to show that it is a thing.
Yeah, then
Uh,
they love it. I mean, when I got the tour of Jane Street's office, they have like a poker room where they host poker events during lunch and after work.
Hmm.
Um,
That's awesome.
poker.
Yeah, like one of the guys didn't like even know how to play at all. So we're kind of starting from nothing. But I was trying to teach him like just how pot odds work and things like that.
Here it is. This is what.
are you? Oh, you sent. Gotcha.
So I mean, yeah, jump trading. It's like everyone. Like it's
Hmm.
it's a lot of people hosting this. But I think it's a great experience because honestly, one of the best parts about playing poker is that it's a really nice anecdotal way of sharing that you have good game theory sense. Because with playing poker, there come a lot of stories. So it's really easy to shoehorn into a conversation without seeming like you're just trying to brag about what you do. But you can do both at the same time, which is nice.
Yeah. And just all of us getting to know each other has been good because the reason I started bringing people is because I didn't really know anybody in the program. So it's been good.
And the also make sure that if we're telling MFE students to say that they play poker, make sure they actually know what they're talking about. Because
Yeah.
if you put poker on your resume or website or talk about it, they will grill you.
Oh,
Like
I never.
because I think a lot of people like to say that they play poker because they know Jane Street and SIG have a poker culture. So I think too many people put it on like their resume or application that they play poker, and they will ask you just simple anecdotal like, oh yeah, well, like, what's your strategy in this situation? Or if this happens, what are you thinking? And people can really shoot themselves in the foot by getting caught lying about that kind of thing.
Mm.
Makes sense. I mean, it wasn't even something I thought to put on my resume, really. Just I don't study enough to say I know it, but yeah.
Yeah, I found like a great foot in the door for those kind of things is like having fun things to talk about that show that you're academically inclined and like game theory inclined. Like
Yeah.
people love talking about poker. They love sharing their stories a lot. And same thing with chess. Chess has gotten good feedback, but not as good as poker for sure.
Do a chess rating.
My highest lead chess was 1980.
Wow. That's
Um,
awesome.
but
I,
it's gone
I
down a
had
little
like
bit.
a 1350 chess.com a couple of years ago,
Yeah,
but
and I mean that's lead chess is a little inflated. Well, it's very inflated. But yeah,
yeah,
Caleb and
I
I
know
went
it.
to Philly a couple times, or I went to Philly to play in a tournament. Caleb and I went to Pittsburgh to play in a tournament, and we did a couple around Maryland in college.
Mhm.
And again, those are just good stories that I feel like show that you're interested in this kind of thing.
Did you talk to Bessa, by the way? You know who she is, right?
Yeah, yeah, we've talked to her a couple times. We never
Yeah,
actually
okay.
ended up setting up a match, but I mean, Caleb and I were both very sh
Yeah,
not
she was
shocked,
a
like,
ranked. She was a ranked player. She's actually she is going. She's actually doing something with BTSC right now.
yeah, yeah. And I mean, it's very impressive. And her rank
Yeah.
is like take me and Caleb's ability and crank it up by 50, like multiply
No,
by
but I mean,
50 at the minimum.
yeah, poker and chess. Yeah, that's these are signs.
And board games in general. They
Yeah.
love playing board games. I mean, the super day for Jane Street's quant role is just playing games with other interns and other employees. Like you learn about how like bid ask prices work. You're given 200 poker chips to bid on stuff throughout the day, and they just see how you trade those poker chips throughout the day. And the main goal of the employees is to put you in really uncomfortable spots with your chips, like make you feel really uncomfortable with the, whatever you're doing. But they love board games. Catan,
That sounds
Terraforming
fun.
Mars, um, not just like chess
Yeah.
and poker. They like PLO.
Yeah. And as soon as we get people regularly doing things, it'll be so easy to just expand. I think right
Yeah.
now my goal is just to get people all knowing each other and having fun, and then we can put them in whatever crazy
You know,
situation.
maybe we should do it with there is a mountain.
The mountain quants.
Yes,
Yeah, I talked to them about putting a poker tournament together, and they liked the idea, but that was last semester, and I haven't talked to them since.
we should do that. Maybe we could finance it. Put some tables together, get some food. You know what I mean?
Yeah,
Yeah.
I mean,
Some prices.
I looked at, I mean, we're just trying to vaguely plan it, but if we did a $30 buy-in for 50 people, we could buy chips, we could buy food, and we'd still have a decent amount left over for prize pool.
Yeah. And I mean, if we, it's pretty easy to get some stuff very cheap. There's like large poker chip vendors that, they're not great chips, but they sell a lot of chips for very cheap. And we can do
Yeah.
something good.
Okay. Let's look into that.
Sure.
Yeah.
Yeah, I
Yeah,
can put
yeah.
a
Caleb
fall.
and I used to host a bunch, and yeah, if you're hosting a bunch too, it's not too hard.
Sounds
We
good.
just need the people to do it. Okay.
The mountain quants have enough people. We could make it happen. How's it going, Professor Porth?
Okay. I'm locked out of Lehigh on my computer, which is why I'm on my phone.
We're talking about starting a poker tournament for Lehigh.
Well, yeah, considering that we are live on YouTube, I will make no comments that are not 100% positive at any time.
Okay.
When we get into deeper technical discussions, we may want to reconsider being so public.
Wait, I'm controlling this from here.
How's it going, guys?
I'm pretty good.